India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. Once again, it's a really rainy morning. And, it's we can only put a camera outside and show you how it's coming down down in sheets, literally. I mean, I think it's the definition of that. We of course have got a lot to track. Our hands are full, and we'll get to that in just a bit. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, good morning. Sometimes the markets can surprise you. Today, the monsoon surprised me. I didn't think it would be that bad, but now I'm in Mumbai. If you're anyone who's venturing out, just be safe because, it's really raining hard.
But I checked with Santya, who's on top of it. She told me the IMD says it's going to be, it's a yellow alert for the day. So I don't know whether, we should worry or not. But for the time being, it's not looking anything like the yellow alert. Very, very heavy monsoon, but plenty of action in the markets. Big results day today. Probably the biggest result day in the entire calendar year.
Friday blockbuster lined up, right?
I hope so, right? And, because Infy has done it. Infy's reported numbers, which are really strong on pretty much every metric. And we'll talk about more Infosys in a bit. But in any case, I mean, yesterday, just to rewind the clock and start where we left off, it was singularly the IT services stocks which led this sharp recovery from the day's low. I mean, the day's low yesterday was about 24,500. We left off at 24,800, right? I mean, that's a 300-point recovery, a clean 300-point recovery from the day's lowest point. And what led it? That 2.7% rally in the Nifty IT index, and it was led by TCS and Infosys and so many other stocks. So maybe the market had a whiff of what was coming with the Infosys numbers. A strong set was expected, stronger than the 2.5% constant currency growth that the consensus numbers which analysts had penciled in. But this is stronger than, I think, what many were expecting. So I think that's essentially the backdrop. Infosys ADR, by the way, has closed up about 8% plus, 8.5% higher overnight. We will see. I mean, will we get such a strong move, or has the stock already preempted a lot of the gains? But even then, I think you're in for a strong day as far as Infy is concerned. There you go. That's the ADR I'm talking about. It's a bit of a risk-off session overnight. I mean, in the proper sense. I mean, yesterday, same time, we were talking about how the Dow was up and the S&P and the Nasdaq were lower. Guess what? I mean, today, as we start this session, Dow is down 1%. S&P is down on your screen. Nasdaq and the Russell 2000, which is the small cap space, which is where many were pointing to the fact that there's a nascent recovery underway. It's not just the mega caps. The Russell 2000 also sold off about 2%. And I think what's not worrying, but I think it's noteworthy, is that many U.S. stock indices hit new one-year highs before pulling back. So, for example, the Dow hit a new 52-week high and then ended 1% lower. Same with the Russell and same with the Dow Transport, etc. Many others. So some of the other markets, bond markets, US, the yield went up about 4 basis points. Dollar index was stronger, almost about 0.5% higher. We're back above 104. And oil prices were down about 0.4%. We're at about just under $85 a barrel. Well, I think what's really starting to, markets are trying to start to trade, I think, US elections, but they don't know what to do because there is still uncertainty about who the Democrat candidate is. Is it going to be Joe Biden? There are reports from websites and news organizations like Axios which say that more top Democrats believe that Joe Biden will exit as their presidential candidate early this week. And remember, the Democratic Convention is in the middle of August, 19th of August, I think, and that's when they formally elect their sort of presidential candidate. Will something happen before that this week? And some believe it's already too late. And remember, betting markets in the US are now giving a 70% chance. It's still early, but a 70% chance for Trump to come back, Trump 2.0. Now, there is also another sort of report. This is in the Washington Post, where they say that Obama has told allies, former President Obama has told allies, that Biden's path to victory is diminished. And I think many are looking at this and saying, well, maybe we will see, Biden sort of bowing out. Markets are continuing to reprice Trump's prospects and what he'd like to do. We put out a detailed piece yesterday about what some of the what his beliefs are on a variety of subjects yesterday, and we'll continue to touch base upon that. There is, of course, the Republican convention, which is closing today. Trump's comments, etc., should be in focus. Just to circle back to levels here in the market, I think Infi becomes has an outsized kind of importance, and you square that off against a weaker global setup. And you add the point that there is the budget which is coming up on Tuesday, which basically means that you've got today's session and then Monday's session, 2 trading sessions away. And I think it does give you, I think it should give you a sense of pause before that big event. Infi or no Infi. Near-term psychological resistance stands at about 25,000. We're about 24,800 already. It's 200 points away. Support standard at the 40 hourly exponential moving average. By the way, that yesterday that level was 24,580. We sort of almost hit that, and then that was basically the low, and then the market bounced. That number has moved down to about 24,541 this morning. On the Bank Nifty, we've been consolidating around the 20-day moving average. One hopes that we finally see a break out of this consolidatory price action. And I think we'll know when that index takes out the 53,357 level, which should confirm further upsides. GIFT Nifty will come up on your screen, indicating the start. It's about a 50-odd point higher start this morning. Surabhi.
And Prashant, this is actually not in sync with Asia, because Asia is following the tape from Wall Street. Most of the markets are down. That happened yesterday as well, but we managed to chart our own course, which is why, as I think of the headline today, it's really global headwinds versus local momentum. Yesterday, the latter prevailed. Will the same happen today again? Because that's the Asian picture, as you can see. But for us here, and of course, Prashant's already gone to the points about the risk-off that played out, including in the Russell 2000. That's the point. Till now, we were talking about sector rotation, maybe money moving out of the Magnificent Seven, the whole tech rally, and getting into small caps. But yesterday, even that space got battered down. The jobless claims number that came in yesterday, it was mildly higher than estimates. 243,000 was the reported number. It was also a week-on-week increase. So let's see how sort of that is interpreted. Anyway, everybody's betting on that September rate cut. The probability of that is the highest, as high as 95% even as of now. The dollar managed to pick up a little bit from those 4-month lows. Now, for Infosys, the thing is that, everything was good. You just can't nitpick and find any issues with the numbers at all. The guidance goes up. The constant currency growth at 3.6% is the best in class that we've seen till now. And margins go ahead and expand 100 basis points. TCVs, the point is you just can't complain. You can't find any fault. And to add to that, the commentary, the one line that really stood out for me was the one that came in from Salil Parekh himself. He said that there are early signs of improvement in the financial services sector in the US, and that in part explains the kind of numbers that Infi delivered. Now, other IT numbers that have come today, they're actually a bit of a mixed bag, you'd have to say. You've got, L&T Tech, which is actually a big miss. You've got Persistent, which is, margins are, a little down, revenues all right. So we'll have to see how the rest of it is interpreted as well. The fund flow picture, that's fine, that's solid. And a lot of this buying that we saw in IT was backed by FII money, because FIIs were net buyers, almost 5,500 crores of FII inflows coming in. Domestic institutions were on the sell side yesterday, about 3,000 crores of DII selling. A word on HDFC Bank, because there was, of course, the letter to the shareholders that came out yesterday. And the CEO reiterates what the street already knows. It's not new, but anyway, I thought I'll just put it up out there as another cue to keep on the table. He says that we'll continue to focus on granular deposit mobilization, aiming to bring down the credit deposit ratio to pre-merger levels. And because of that, would grow advances a little slower than deposits. Now, the street has factored this in. There's a reason why that stock has not been moving. But for what it's worth, that was the commentary. And as Nigel has been telling us, it's a full house on results. So here's the tally for your reference. Reliance Industries, BPCL, ICICI Lombard, JSW Energy, Ultratech Cement, Wipro, Paytm. These are only some of the big names, but big packed day lined up ahead. Nigel.
Well, that's right, packed day, and we are set for a big weekend as well, going by the kind of numbers that we're going to be getting. But the Nifty, it appears we're set for Mount 25,000 odd. And who would have thought? We had a big rally, pullback in very, very temporary. And then, in fact, we're all set for that golden 25,000 odd mark. Overnight queues, as you'll have mentioned, well, they're rather weak. But the buy on dips is something that's been working. So the street will focus on that. But earnings, that will take center stage for the next 2 sessions. And then all eyes on the budget. To just give you a sense about why I say that this is the biggest day of, in terms of earnings, either reactions or preempting earnings, is because you put these top 3 together, they constitute close to around 26% of the Nifty weightage itself. Infosys will react to its numbers. That will give the support to the bulls at the start of trade. Towards the end of trade, the street will be bracing for Reliance Industries numbers. And tomorrow we have HDFC Bank as well. So 26% of the Nifty will be bracing either to react to numbers or looking at numbers post-market and tomorrow. What did the FIs do? They did what they have been doing. They added long positions, 58,000 contracts odd, in the ratio of close to around 4:1. And that's why the long positioning is continuing to hold at around 81%. Remember, the long positioning came down from around 3.9 lakh contracts all the way to around 3 lakh contracts. But in the last few days, we've seen long addition yet again. So if you pull up the chart, you'll see that we're currently back at around that 3.9 lakh contracts odd, which is near that lifetime high. The all-time high is around 3.93 lakh contracts. What about the options data? 24,800 call as well as put. Well, they were fairly active in yesterday's trading session, which brings us to a couple of levels. Yesterday's low is very important, both on the Nifty as well as on the Nifty Bank. So on the Nifty, that level that comes up for you, yesterday's low was at around the 24,500 odd mark. That's your first reference point that we're looking at. And going by the options data, since the 24,800 put has seen a lot of writing, well, 24,550 is important. I'm only giving you support levels because on the upside, anything's possible once we get past the 25,000 odd. So these are the reference points in case we get a bit of an intraday dip. On the Nifty Bank, yesterday's low becomes important yet again, the 52,170 odd mark. The 20-day MA, we've been flirting with this level. We ended above this level in yesterday's trade, but I think that 52,900, 53,000 mark becomes very, very important. But it's going to be a stock-specific day yet again. LTTS, those numbers are very weak. Top line, margins, the guidance that they've given looks very, very ambitious, and the stock is not cheap. It trades at around 33, 34 times FY26 earnings. So that one's going to pull back, particularly when you have the sector that has tailwinds and is coming out of out of a bit of a flattish phase. This one could be an underperformer from the day, but after it starts gap down, we'll have to see what happens. Dalmia Bharat, the numbers look very, very good. One of the biggest underperformers in the last 1 year from the cement majors. After it opens higher, I'll be interested to see what happens because their realizations were flattish on a quarter-to-quarter basis. So some part of the street is doubting whether that's sustainable. We'll keep an eye on that one. And the third one is Tumbled Fertilizer. It went to the F&O ban. The stock saw a correction of close to around 5% or thereabouts, but it's come out of the F&O ban. So I'll be interested to see ahead of a budget event, all this talk about fertilizer and rural economy. We'll keep an eye out on Tumbled Fertilizer as well.
All right, Nigel got that. So those are the big cues with which we are getting set for trade. Let's move on and get you the equity call of the morning. In fact, for equities, we'll start with the money market views, actually. We have a view on the rupee coming in from Lakshmanan V of Federal Bank, who says the U.S. economy is displaying signs of disinflation, leading to market confidence on potential rate cuts by the Fed in September and a decline in the dollar index. The ECB's decision to maintain its current policy stance has moderated gains in the euro. The British pound strengthened following the higher inflation report. The Japanese yen experienced significant recovery as the dollar weakened. Meanwhile, the Indian rupee depreciated due to corporate outflows and increased demand from oil companies. In the coming session, he expects the USD-INR pair to trade in a range of 83.40 to 83.80.
Well, on bonds, we have Lakshmanan V, who says that Indian government bond yields traded marginally lower as market participants await key data points, the fiscal deficit target and gross borrowing figure in the final budget due next week. Globally, he says U.S. yields have been on a decline on increasing expectations that the Fed will cut rates sooner as the jobs market has softened. Inflation eased closer to the U.S. Central Bank's target of 2%. He says coming sessions could see the 10-year benchmark bond yield trade between 6.95 to 7.05%.
Well, we've got plenty of stocks that we're tracking for you, but let's just highlight the special top 10 that we're looking at. We're looking at Infosys, Dalmia Bharat, Persistent Systems, Havells, JTL Industries, Tanla Platforms. All of them will be reacting to positive news flow. On the flip side, you have JSW Infra, L&T Tech, Tata Tech, and CEAT. There are stocks that will be reacting to negative news flow.